For cash flow and safety, utility stocks are the best investments you can make, but you have to know which ones to buy. I'm screening through the 300 plus utility stocks to find the best of the best to create a dividend portfolio that will protect your money. We're talking best utility stocks to buy for 2020 today on Let's Talk Money. Beat debt, make money, make your money work, creating the financial future you deserve. Let's Talk Money. Hey Bowtie Nation, Joseph Hogue with the Let's Talk Money channel here on YouTube. A special shout out to everyone in the nation. Thank you for taking a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. To be honest, a lot of investors probably won't watch this video. Utility stocks aren't as sexy as tech and don't pay those high yields of energy stocks. Stocks in the sector have had a runaway year and valuations are a little expensive, so interest in utilities is way low right now. But I'm glad you're here because this is still a critical sector for your portfolio. I'm going to explain why utility stocks need to be in your portfolio, why they could produce double-digit returns in 2020. Then I'll reveal 5 of the best utility stocks I found searching in a group of 300 plus companies. It's part of our 11 video series uncovering the best companies in each stock sector. Over these 11 episodes, one for each sector, I'll show you how to pick the best of breed in each. We'll look at some of those big trends and how to pick stocks to buy. Then I'll reveal my 5 favorite stocks in each. Now, if you're just coming in later to the series, I'll link in the first comment below the video to the most recent video. I'll also be linking in the video description below all the videos in the series so you can see all the stocks for each sector. This is one of my favorite strategies and hugely powerful. Not only do you get an opportunity for market-beating returns with some of these best stocks you can buy, you get a diversified portfolio with investments from each sector of the economy. That's going to help smooth out those roller coaster rides in stocks and keep you from freaking out if we see a crash in the next year. Here's that graphic again of the stock sectors, and today we'll be looking at utilities including electric and gas, water, renewable power companies, all those within that space. The sector has had an amazing year, producing a 16% return over the last 12 months against a 12% return on the broader market. And that is not normal for utility stocks to outperform like that. 3 interest rate cuts by the Fed really boosted this sector, and investors are worried that returns going forward might not be quite as hot. But there are 3 reasons you still want to be watching utility stocks for your portfolio. First is that rates aren't going to be increasing. Fed Chair Powell has pretty much committed to no rate hikes unless inflation really takes off. This is at least going to be neutral for utility stocks, and rates could actually fall a little further if that economic growth continues to slow. Now that could mean that utilities fool the skeptics and post another runaway year in 2020. Another reason, really a no-brainer here, is that utility stocks pay some of the best dividends in the market. That sector pays a 2.9% yield, and the 5 stocks that I'll share with you here average a 4% dividend yield. Now finally is that while the economy and the market seem to be holding up right now, you need that what-if insurance you get from utility stocks. The market has wobbled a few times over the last year, and nobody knows when that next crash is going to come. Utility stocks beat the market by 10% through the worst of that 2009 crash, and the opportunity is there to protect your money even better by picking the best of breed companies in the space. Now I want to get right into the 2 utility funds and the 5 stocks that I'm watching, but if you're just joining us, make sure you watch that first video in the series. Not only did I reveal 5 of the best tech stocks to buy right now, but I detailed how I'm picking stocks for this series. In the video, I go step by step into the 5 criteria I use to find the best stocks. I'll leave a link in the video description below, so make sure you check that out. Now, as I've done in these other videos, I want to show you a couple of utility funds for that broad exposure to the theme. These are going to be great if you can't find a company that you really like or maybe just want a little bit more diversified exposure. The Utility Select Sector Spider, ticker XLU, pays a 2.9% dividend and charges an expense ratio of just 0.13%, which is one of the lowest you'll find for a sector fund. The fund holds shares of 28 companies in the theme, representing the sector, so mostly in that electric utilities group, but also some of these multi-line companies and other producers. Another interesting fund for utilities exposure here is the iShares Global Utilities Fund, ticker JXI. Now the fund is a little bit more expensive with an expense ratio of 0.46%, but pays a 3% dividend yield and gives you access to international utilities. The fund holds shares of 66 companies with about 2/3 in the US, but also a good mix in European companies and some other as well. Now our first of the 5 utility stocks here is Dominion Resources, ticker symbol D, and a 4.5% dividend yield. Dominion pivoted from an energy exploration company to a utility in 2017, but it still has some of those midstream assets that really makes this an interesting investment. The company owns a liquefied natural gas export facility and is 48% owner of the Atlantic Coast Pipeline Project, as well as owning one of the nation's largest natural gas storage systems. Now, this all makes for a really more diversified investment and probably faster growth than those pure play utility companies. The regulated business contributes about 45% of the operating earnings, so you've still got that safety play that you get with a utility. Shares trade for just over 20 times earnings, which, is a little expensive. Earnings are expected 10% higher over the next year, which is excellent growth for a utility and really speaks to those midstream assets. Now, that valuation is going to be an issue for most of these stocks, and when you look at the analyst price targets. You see here a graphic of forward price to earnings ratios for each sector. The dark blue line is the current PE, while the green bar is that 10-year average PE ratio for the sector. At 20.1 times, the utility sector is one of the most expensive on the graph and trading at a 30% premium to its 10-year average multiple. Analyst price targets for Dominion range from a low of 76 per share to a high of 90 each, which is only a 10% return, but remember that's on top of that 4% plus dividend yield. Here I'm going to throw you for a loop and include Berkshire Hathaway, ticker BRK/B, in our list of utility stocks. Most investors don't know this, but Warren Buffett's Berkshire is also a utility company. You hear about that stock portfolio all the time, but actually 10% of total revenue comes from Berkshire Hathaway Energy, which is a subsidiary of the larger holding company. In fact, by sales, BHE would be the nation's third largest utility behind Duke Energy and Exelon. Now, Buffett likes to use that massive cash flow from the utilities business to invest in the stock portfolio. This means the company doesn't pay a dividend. It only paid one once in 1967, but that's still a solid bet in this theme. Berkshire is sitting on a $128 billion cash pile and will probably either issue another special dividend soon or just buy back more shares like it's been doing. Either way, that's going to boost the shareholder value here. You don't get the kind of returns Warren Buffett produces without paying for it, and Berkshire shares trade for almost 22 times earnings. Now, earnings are expected nearly 8% higher over the next year and should beat expectations on a share buyback program. Now, there's only one analyst here with a price target, so take this with a grain of salt. I'm showing it for continuity, and I think that 242 price target is actually a little low considering the stock's history of returns. Exelon, ticker EXC, is the nation's largest utility company by customer base, with 10 million power and gas customers across 6 regulated utilities. Besides that traditional power and gas segment, Exelon is also the largest nuclear operator with 14 plants across North America. Now, although the nuclear segment has struggled against low natural gas prices over the last few years, I like this diversification in businesses. Having both that traditional and the renewable segments help Exelon in just about any pricing environment. Shares trade relatively cheaply at just 15 times earnings, though you see that management hasn't been as consistent at beating expectations as I'd like. Earnings are expected 9.8% higher over the next year, which could really drive the stock price if they can meet it. Better analyst coverage here with 10 analyst price targets ranging from a low of $46 a share to a high of $55 each, and a 20% return on the current price. One of the few value plays left in utilities is Edison International, ticker EIX, with its 4% dividend yield. Edison counts over 5 million customers in Southern California, excluding Los Angeles, and it's a fully regulated utility. The wildfires and a planned share issue have hit the shares, but I think investors are confusing some of the important fundamentals here. Now, management raised its full year 2019 earnings guidance in the quarterly call, but it got drowned out by that planned share issue that's going to be used to cover the company's $2.4 billion payment into the California Wildfire Insurance Fund. In fact, the company's exposure to the wildfires this year has been minimal, but investors are just having a hard time looking at Edison without thinking about that bankrupt PG&E. Shares trade for 14 times earnings, which are expected to decline slightly next year on the share dilution, but should rebound quickly after that. I think after this wildfire season and investors see that the company is safe, shares could take off from here. Now, analyst price targets range from $72 a share on the low side to $84 a share on the top end. The company spends just half of its earnings to cover that dividend, so lots of room for growth here and one of the few underpriced utilities around. Now, I like Duke Energy, ticker DUK here as well, but you might not want to hold both it and Dominion Resources. You see, Duke is the other major owner of the Atlantic Coast Pipeline project. Now, the pipeline has come under legal problems with the Supreme Court agreeing to hear arguments in June or July of 2020. I think there's a good chance the court overturns an appeals court ruling against the permitting, which could lead to a pop in the shares for both companies, but it could also go the other way and weigh on both of the shares. Now, Duke is the largest regulated utility by market cap in the United States, with a business in 6 states and 7 million customers. Shares trade for 19 times earnings here, which are expected flat over the next 4 quarters. Analysts aren't expecting much from the shares, with a low target of $93 a share and a high of $99 a share. The fact that nobody's expecting much could be what drives a better return on these shares though. Watch the first video in the series, the best tech stocks to buy right now, and the factors I use to find stocks in these videos by clicking on the video to the right. Don't just follow me into these stocks. Find out how I picked them and how to find other great investments for your portfolio. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.